All right, welcome back. You're with us here on Opening Moves. Let's get some technicals of this market out of the way. Big selling over the last 4 or 5 trading sessions. The index has lost over 5%. Full retracement of the bounce from 5,690 to about 6,070, which was the high a couple of days back. Almost full retracement. So where do we head from here? And we're going to expand the horizon that we're talking about to the last couple of weeks and then probably even longer. Sarvendra Srivastava joins me to talk about all of that and more at Emkay Global. Sarvendra, great having you with us here on the show, as always. So what are we talking about? We've got 3 charts here. The first one is basically talks about a channel that the market actually broke out of and now risks actually breaking below, coming back into that channel.
See, I thought we'll carry the best part first. This chart remains the only silver lining right now. If I have to look at the markets, sectorial indices, other indices, stocks, probably Nifty's chart and Sensex, these are the 2 indices probably which tell you that there is a minor ray of hope where you are still on this breakout. Right. You are still trading that above that breakout. So this was a 52-week range channel which we broke out at around 55, 50, 56.
Okay.
And now, since the line is sloping, that very same channel supports around 5,700. So 5690 is what we made a low on 26th.
Right. Okay.
As of now, we would have to go step by step. But one thing is very clear: if we break 5690 and stay below that, then we are seriously the long-term trend is in a serious threat. Which already the next chart will show you that the long-term trend is already weakening.
Then you would classify this move, which happened at the start of September, as a false move, as a false breakout.
Yes.
If you re-enter this channel.
Yes, if you re-enter this channel and if you go below the breakout at 5630, then definitely it's a false thrower, it's a false breakout, and such moves are usually traps. So this is a classical bull trap then.
Right.
And bull traps, when they unwind in a severe manner. So you would have repercussions going into the next 3 to 6 months at least.
Right. So, just for a layperson, is it that bad if you re-enter this channel? What's the lower end of this channel that you're looking at? Essentially, then you...
See, if you re-enter the channel, definitely bad. And the lower end of this channel would be somewhere around 5,000 right now.
Okay.
So, and it's slightly sloping. So, by the time if it breaks and in the next 2-3 months if it attempts, then that channel will get attempted around 5,100 levels.
Okay.
But the overall picture will turn bad the moment you start, say, trading below 5690 and then break back within this channel, and the breakout level was 5630. So within this range, 5630 to 5690, if you start holding below that range, then this was a false move, this was a false breakover. And this entire bull market, probably what started in October 08 from 20 to 50 Nifty, probably that entire move gets complete and you do a very large retracement.
Okay, all right, fair enough. Let's move to the other one. This is the next graph basically shows you where we are from March 2009, right?
Right.
March 2009 is when the market bottomed out, which is at this point.
Right.
And you join the lows and you get this particular trend line.
Right. So as this chart shows you that, as in on the first chart we are saying that there's still a ray of hope. This chart tells you that the first signs of weakness are already creeping in the market. So if this trend line started in March 09, very nicely caught the low at 4786, and then also the 5340 low was on this trend line. So now this trend line gained a lot of importance, and it was whipsawed on 2611 by a 20-point margin. So we ignored. At that point in time, we said, okay, market could still have a chance to bounce back. But now with this bigger retracement on this rally from 5690 till 6069, typically when you retrace more than 61% of any rally, the probability that you will break the low increases many a percent. So now I would assume is that 60% chances that finally you will break 5690.
Okay.
All you can do probably as a saving grace from here is that you might do a bounce back to 6069, which was the high of the recent pullback, and from there if pressure re-emerges, then from there I think that second leg of thrust will break 5690.
Right. No, by this chart, it looks like we've already sort of, broken the trend line.
Yes, that is what I said. The signs of concern are already there.
Below this, and then you probably have to say that that's gone.
Yes, if you don't recover in a session or two, as it is, you've broken this trend line by almost a 2% margin right now. See, the trend line right now is at 5850. Last time when it broke by a 30-point margin. This time you've already broken it by almost an 80-point margin. So that's almost 1.5–2%. So as in you are saying that the trend line is broken on a closing basis. If you continue to stay below this for a session or so, and volumes pick up, then as I said, then those repercussions can carry on for some time because this entire move will get retraced.
Okay, all right. Let's move on to the next chart. Two simple charts. They make the point. Let's get the next one as well. This has got a lot of stuff on it, so you'll have to explain what this is all about.
See, this is a statistical chart. This is a standard deviation band. It's a 2 standard deviation band on the Nifty itself. I went back as far as 1996, and I've seen whenever such kind of turn trades usually happen on the upper and the lower Bollingers,
right,
which is a +2 and a -2 reading from the mean. The central line is the mean.
Okay.
So whenever a turn trade happens on the upper or the lower Bollinger Band, typically the market or the index or particular security has a tendency to revert back to the mean at least.
Okay.
So the first trade in such a scenario when there is a turn trade would be the mean, right? So all along I have marked all the times wherever we had a turn trade on the upper Bollinger Band, including this one as well, and this one is a bullish one as well. So all those turn trades have played out phenomenally well. The entire 2003 bull market, you see this turn trade always going towards the mean, reverting towards the mean and then pulling back. But the problem is that once you get some larger sell signals like in 2008, you can in some cases also break the mean and go below till the -2.
Which was this point? This was 2008.
This entire fall was 2008, right?
Okay, all right. All right.
So such a turn trade has again emerged after say almost 18 odd months. Such a turn trade on monthly, this is a monthly chart, so such a turn trade has again emerged on the monthly charts. November was that month which gave you that turn trade signal.
Right.
So now if I have to just say a bare minimum mean target, the mean currently is placed at 5172.
Okay.
So typically what it would tell you that over the next month or so, there could be a tendency for the index to drift towards the mean.
Which is this point, which is
5172. The mean is as of December.
Right.
By Jan, I see that this mean would be somewhere around 50 to 50. So by December, Jan, you should be drifting towards the 52 mark. So this trade has been almost it's a 90% strike rate trade. So it's not a view, it's just a trade.
Right.
But there are people who take this trade. Quant traders would definitely take this trade.
Right.
People trading algos would take this trade.
Right.
And their lot size is absolutely huge. So when they trade in big lots.
Right.
So if this trade matures, I think there are chances that you will break 5172 also.
No, so this is a turn point, right?
Yes.
Where we are right now.
Right.
So that's actually playing out right now. Would you attribute a lot of what has been happening over the past few days?
Yes. With the 52-week trend line break, and
right,
if we re-enter within that bullish channel as I showed in the first chart, the probability of this trade going to its target would be as high as 70-80%.
Okay, all right, fair enough. For the next couple of odd months, what's the we discussed 3 charts, but for somebody with a view of about a month, 2 months, 3 months, what's the most important sort of point we're looking at if you look at charts? Is it 5690, which was the low on the 26th of November? Does the market need to retrace the entire move of when we started off from the start of September, which is I think at about 5500 or so, close to that? What's that level? Or would you say at 5690, all bets are off, hopes of a recovery then kind of diminish?
See, hopes of the recovery since the last time we met have already diminished. So if it was last time it was 60-40, that irrespective of BSE 500 getting topped out or the larger market which had already topped out the mid cap, small cap space, it was only a handful 10-15 Nifty stocks which were looking good, and they were primarily led by banking. Right now, banking is the first index as of yesterday to break the 2611 low. So now, the sector which was looking good is now looking the weakest. Right.
Right.
So you would assume that Nifty can be the only saving grace, and as I said, 5630 was the breakout out of the 52-week channel.
Right.
5690 is the current low. Within this band, 5630 to 5690, that is the only salvage point, if at all. Else, you will go in for larger retracements. That is being suggested by 2-year cycles, by quarterly cycles.
Right.
If I go to Sensex history, right from 1917, or it has never been that the Sensex rally has lasted beyond 5 or maximum 6 quarters. This time we are already in the 8th quarter, and probably from the low we are into the 9th quarter, and we are still moving on. We have still not had a negative quarterly close, which I think a very high probability that December will give you a quarterly negative close.
Right.
And after a quarterly negative close on Sensex, cycle analysis tells you that usually the retracement is a 38% retracement, a minimum retracement.
Right.
And maximum we have seen 100% retracement. I am not sounding that bearish, but I am saying a minimum 38% retracement would be bad for the market, as it is.
Today you got a 40-odd point bounce on the Nifty. if we have 2 or 3 days like this, is there a fair possibility that the market kind of starts to pull back and all that we've spoken about might not materialize in that sense? If we got 2 or 3 days of positive closes and then a couple of days of calm markets, is that a possibility as well, which you need to keep at the back of your mind? Or looking at some of those slightly longer term charts, you're convinced that you might get these bounces, but then from a slightly positional point of view, the trend is down.
Yeah, I'm afraid I'll go with the second thought. See, with the kind of damage that has been done, the kind of money which has been lost, or the kind of sentiment that we are carrying right now. See, market abhors vacuum or uncertainty. We are not getting any confirmed thing or confirmed news coming out of anything. We are just getting rumors, we are just getting of inquiries also, we are just getting the froth, and we are not getting the real thing. So as long as all that continues, market never likes it.
Right.
And rumors in the market are worse than the news itself. News comes, gets discounted. Rumors continue to linger for 15, 20 days, 1 month.
Right.
This can carry on for 3 months. So with the kind of price destruction we have seen on the broader markets, I would go with the second thought that whatever will be happening will be just a bounce. And this view would get reinforced if we get a quarterly negative close in December. So it will get reinforced that everything happening from here is a bounce, and 6338 probably was the even year top. If I say a even year top, I go back to 1986, all the way from 1986, barring apart 88, 90, 92, 94, 96, 98, 2000, 2002, 4, 6 and 8. All even years in the market have led to meaningful tops. And from there, markets have corrected for at least 3 to 6 months. Again, if I go on that analysis and I look at the minimum, what the market did from the high, it was 25%. And what is the maximum it did? It did close to 70%. So even with the 25%, if I say it, and that is again just a cycle trade.
Right.
It's not a view.
Right.
Which I am carrying right now. But that turn trade or that cycle trade tells you that with a 25% cut from 6338, Nifty can fall all the way till 4750. So those are huge moves lying ahead.
Right.
And how they will unfold, it becomes very difficult to tell as of now.
Right.
But on a fortnightly basis, we can keep on reviewing and keep on seeing where we are headed.
Absolutely. I'm going to wrap it up for now. Thanks so much, Sarvendra.
My pleasure.
Great to get that perspective across from you as always.